Welcome to the Diamond Hands podcast, where medicine meets momentum and branding becomes a leadership system. I'm Leslie Tracy Craditchville, co-founder of Diamond Hands Media. I build aesthetic brands that lead, with a background in employee benefits and business finance, so brand becomes authority and asset value. This is mindset, money, and marketing for founders building brands that run without them. Because brand isn't a logo, it's how you lead.
Hey everyone, welcome to another episode of the Diamond Hands podcast. Today, we have a little treat for you. We have a bookkeeping expert. We have Angelica Mira here with us. She is the co-founder of Speakeasy Bookkeeping, and they specialize in med spas. And so welcome, Angelica.
Thank you. Thank you so much. I'm happy to be here.
Yeah, same here. I usually like to start with this, basically, just tell us a little bit about your background and how did you land in bookkeeping? Like, you're so beautiful. You could have been in modeling. Like, what happened?
What happened to the dream? Well, thank you for that. I've done bookkeeping and accounting for, I want to say close to 15 years now. And it's just really what it comes down to is I'm really just good at numbers. Mm-hmm. And so I've studied accounting. I've been in corporate accounting for a long time before we branched off and found our own practice. So we did accounting for various corporations, larger corporations, thousands of employees. And then I just started doing bookkeeping. I was realizing I saw the need for smaller to medium-sized business owners really needing bookkeeping and accounting support. And I saw this kind of wide open space, essentially. So we just started advertising, we'll do bookkeeping for smaller to medium-sized business owners. And it really took off naturally because I think a lot of business owners, you get into whatever industry you're getting into because you're passionate about that specific work. Not a lot of people are passionate about accounting and bookkeeping. So that's something that tends to fall on the back burner, but it's such an important aspect of running a business that a lot of people were like, I can't do this. I got to stay hands off. I need to find an expert. And so that's really where we kind of just started growing our own practice.
And that's so great. And I know you say we a lot, just like me, you're part of a husband and wife, led team. And I know many of our practice owners actually work with their partners too. So tell me, so you said you've been working with your husband or have you, and you're like a part of a husband and wife team just like me. So tell me a little bit more about how you kind of navigated working with your partner in business, because, many of us do that. I work with my husband. A lot of practice owners work with their partners too, especially in our women-led field. We tend to bring them on. So tell me about that experience.
Yeah. So my husband, he did a lot of sales and marketing before coming on and helping with the bookkeeping practice. He did sales and marketing for a lot of other small to medium-sized businesses as well. He mainly did things like sales funnels and things like that. But the bookkeeping practice just really took off and it really started to grow exponentially. And I think we both just kind of looked at each other and thought, I feel like it made more sense for both of us to focus our energy into the same business and grow that together, because he had certain skills that I didn't when it came to bookkeeping and accounting, right? My expertise was obviously the numbers, data analysis, things like that. And sales and marketing, that is so much more his field. So I brought him on to just really help me to go, let's capitalize on this a little bit better. Let's actually start, making more effort with our social media presence, our website presence, things like that.
Yeah, and that makes a lot of sense, dividing and conquer, because we all have different strengths. And when you have that partnership, you're able to accomplish a lot more. And also, for you guys listening out there, if you guys can do it, you save a lot on employees to start.
Because there you go, right? I don't need to pay him. He's free labor, basically. That was another win.
I know. And it's like, there's something about unified vision that I think is great when, husband and wife teams work together. So I really love that you guys have that. So, something else that I actually had a question for you about is, why is it important that you guys only work with med spa? Because some people might think, oh, okay, numbers are numbers are numbers. Like, anyone could be good at numbers and do my books. Why do you think it's important that you guys are specific to this industry?
Well, I think it's important because when it comes to med spas, especially that industry, there's a lot of moving parts to
Mhm.
that type of a business, right? I would say for somebody who's a business owner that you just have one type of service and you have some really basic expenses, sure, you can hire any type of bookkeeper for that type of industry. But medical spas, there's so many moving parts to tracking different profit centers, tracking those direct costs, tracking the wages that are associated with those various profit centers, tracking all your equipments and equipment loans, multi locations, gift card redemptions, certain things that are big in that industry that just creates more complex transactions. And then on top of that, all medical spas, they're using some sort of EMR system, right? They're tracking all their accounts receivables, not in QuickBooks, because it's not really built to satisfy the needs that a med spa needs for accounts receivable. So in an EMR system, you have all your sales data over there. Well, how do we correlate the two? How do we marry the two? And so having somebody who's industry specific, who really understands that outside software,
Mhm.
I found is incredibly important in time and efficiency.
Mhm.
So for somebody like us, because we are industry specific, we're very familiar with all different types of EMR platforms. We know what reports to pull. We know what numbers to look for. We know the nuances of how data gets entered in and how that affects data that's being spit out.
Mhm.
We spent a lot of hours navigating all those various platforms. So all those hours spent are hours that we don't have to spend now, right? So I've done it already in the past, and now we can just move faster because it is a fast-paced environment as well. There's again, constantly moving parts, new things that are happening in the industry. A lot of growth is happening, and we need to be able to keep up.
Mhm.
And so we save a lot of time having already that knowledge background.
Yeah, and I think that's one of the best things that you just said, saving your clients time because, working in the medical aesthetics industry myself, it's just people don't have a lot of time and people that are like fast paced and everything, they don't like to have to keep on explaining everything. And sometimes if
Yeah.
you get a bookkeeper or a CPA and they really don't understand your industry, they're going to be asking you like, oh, what's this machine, what's that, what's that, and they're going to be asking all these questions. But you guys, like you said, have done the hard work and you've gone through those hours, you've gone through understanding the EMR system, EHR systems, so you have that extra edge whereas someone may not have that. And I think too, it's like, being part of that community, right? It's like
Yeah.
understanding how to serve your community. That's a
Hmm.
big thing. A business owner, when they're starting their practice, when should they get a bookkeeper? Like, should they get it right away when they're just starting, or should they wait until they have a certain amount of profit? In your opinion, when is the best time to get a bookkeeper?
I mean, in my opinion, I think it's good to get a bookkeeper immediately because I mean, every decision that we make needs to be based off of our finances.
Mhm.
Whether we can afford that piece of equipment, whether we can afford that new employee, can we afford the inventory that we need to have on hand, all of the things, even as a new business owner. I understand too, you want to, it costs money to hire a bookkeeper. So you obviously have to work that into the budget. But in my mind, I think that's something that is really a basic that every business owner should have because even if you don't hire a CPA yet or you don't have the CFO yet, you still need to have accurate financial data. So, a lot of times people will come to us and they come to us, they're like, oh, I've been in business now for a couple years. I've never had a bookkeeper before. And now I realize the importance of it. And when we get in there, it is a mess. And that's fine. We go in and we clean it up. But I just keep thinking, have they been making financial decisions, business decisions this entire time based off of this data? And it's all over the place. And I'm like, how do you even understand like where your cash flow is? Lots of times people don't know. They're just going, I see money in my bank account and I assume that it's there for me to use. But then that's how you run into problems, right? You run into, overextending yourself. So my personal opinion, I think it's important to hire them from the beginning.
Yeah, and with that too, what percentage of someone's budget should they be allocating towards a bookkeeper? Like, what do you think is like the benchmark?
I mean, honestly, hiring a monthly bookkeeper, it's not too expensive, especially compared to the cost of a CPA and a CFO. I feel like oftentimes, Robert Kiyosaki says this, that the bookkeeper is the most important person on your team, yet also the cheapest person on your team. You don't pay them that much compared to what they give you. And so I would say on average, I would say 500 a month is pretty benchmark for a good bookkeeper, especially if you're starting out. Med spas, obviously, again, there's more moving parts, so it's going to be a little bit more expensive than just an average bookkeeper. But starting off, I would anticipate around 500 a month.
Okay, so someone coming to you, they can anticipate somewhere between that and probably 2,000, whatever it is, because
Yes, yeah,
different
yeah.
size books and all the different things, different complexity. So yeah, so that makes a lot of sense. And another thing that I want to ask you, so when someone's looking to hire a bookkeeper, what are like 3 key questions that they should be asking to make sure that this person has the competencies that are necessary, and also the data and privacy protection to make sure that they're doing things properly, so they don't get a data breach or something of all their information?
Absolutely, especially because we're in a virtual world right now. And so cybersecurity and data breach is an incredibly important conversation to have. And so that's definitely a question, what kind of insurance coverage do they have with cybersecurity? What kind of security systems do they have in place for their systems? Those are 2 definitely important questions. Also, being in the med spa space, HIPAA compliance is big. So do they have HIPAA compliance? Everybody on their team, not just the owner, but does everybody on their team have HIPAA compliance certification? So we make sure our entire team undergoes HIPAA compliance every single year and keeps our certifications up to date. So a very, very important question. I think it's also important to ask them industry specific, what experience do they have in the industry? What experience do they have with whatever EMR system you're using? Have they worked with it before? Is it a totally new system to them? How familiar are they with med spas? And then also too, what is their just internal systems? I think that's something that we often forget about when it comes to bookkeepers and accountants. Lots of times people hire a bookkeeper and they think that they're hiring just that individual. And lots of times they are hiring just that individual. But accounting work waits for you. So if your accountant or your bookkeeper is going on vacation, do the books fall apart for that month? Because do you just have to wait a couple weeks until they're back, from their vacation? What's their internal system look like? So we spent a lot of time also with our business to make sure that our internal systems that are in place, make sure that nothing ever falls through the cracks. We don't miss deadlines. We don't let tasks fall through the cracks. If we have an employee that's going on vacation, we have a system in place to make sure that the work is still getting done while they're away and there's no hiccups. So we want to make sure that our clientele, when we have somebody on vacation, maternity leave, whatever it may be, they don't notice the difference. They just are like, oh, everything's still smooth sailing. They've got their internal system going. I just know that my books are getting done every single month. So I think that's an incredibly important question that a lot of times people forget to ask is, what is your internal system for your business?
Yeah, and I think that's huge. And you made that differentiation. Like sometimes when you're working with a single solo person, things can fall off when they're gone, or you're not going to get a response or what have you. So I think it's really nice that you guys kind of like lay that out before someone, before someone even like wonders about that. So it's never a thing. And so, going on to more of like a senior practice or what have you, I know that we both work a lot with like Maven. And, something that happens to the larger practices, people are looking to exit, they're looking to leave their practices. So what is important for the books to have or to be taken into consideration when you're like, I don't know, 3 to 4 years away from exit? What sort of things should you be looking for or making sure are important to have on that P&L?
Gosh, you just really want to have every dollar accounted for. So we have been through the experience of, just like you're saying, the owner is looking to exit, they're looking to sell, or they're looking to sell part of their business. And so we've been through that process because lots of times, whoever if it's a private equity company, whatever it may be, if there's another business owner looking to purchase a business, they've got an accounting person or a team on their end reviewing all the financials, or at least they should.
Yes.
They have somebody on their end reviewing every single dollar. So when we went through that process, we had meeting after meeting, really just going through line by line. What's this deposit? How does it tie into the revenue that you're claiming on your EMR? Where are the merchant fees? Where are the financing fees at? Are all these direct costs tied to the bank statement? Every single line item. And so having a bookkeeper and accountant that's doing that consistently every single month, you just know that everything is tied up and everything is accurate. Because when we reconcile, we're not just double checking the bank statement and making sure like, oh, what hits the bank account is also hitting your accounting software, but we're making sure we're checking it against your financing paperwork, your, if you've got loan documents, we're making sure that matches. You've got an EMR system, we want to make sure that matches. You've got financing through Cherry or Patient Fi, we want to make sure that matches. There's a lot of things that we need to make sure that all the numbers are matching. Yes. And so we're doing that every single month because, again, when you're ready to exit and you're ready to present your books, yeah, they'll look at your profit and loss and balance sheet, but not just that. They're going to, because it's really easy to manipulate numbers. So it's easy to make it look like you made $1 million in a year when really it was closer to 700,000, right? Mm-hmm. So they're going to dig and they're going to make sure they're like, I want to make sure every dollar you claim is true and accurate. And they're going to match it to all these other loan documents, all these other statements. So we're doing that consistently. And on top of that, I mean, what makes something valuable for somebody to come in and purchase a business is to just make sure that it's professionally managed, right? So the more that the owner is just delegating work to whether it's contracted workers or employees, the more valuable that looks to a new owner, right? They don't want to purchase a business that's so heavily reliant on the business owner still, because then it's like, well, I have to keep you on payroll then, So it looks better if the owner is touching less and less of the business, because then they can just swoop in and just take over and it's seamless. So
yeah, even though people have to stay on with a lot of these contracts anyways, they don't kind of have a choice.
Sure. To an extent, yeah.
For a little while, yeah. So no, those are all, very, great points. And with that too, it's like when you're communicating with a client or have you, and you're helping them to see like, okay, if you were to leave the business, do you also get into the conversation with your clients like, okay, you're running all of this through the business right now, but if you're not here anymore, all these things are now on your personal financial statement. Like, how do you kind of like navigate those conversations? Because I think many of us business owners, we take for granted that, a lot of things you run through the business, but we're not going to get that tax write-off once we're not owning it anymore.
Yes, that is an important conversation. And so we actually try to separate out those owners' expenses, even if they're tax deductible. So we leave them on the profit and loss because we want to claim them on taxes because you can. But we do try to separate them out and put them below NOI typically, just so that way they can clearly see, one, what's their net profit if they weren't there and they didn't have their expenses there, and then two, like, this is really how much you're spending of your business money on your personal stuff. I mean, we can claim it as a business trip. That's totally fine. I'm not opposed to that. But just understanding that when you do exit, this is on your personal credit card, not on the business. And so just keep that in mind. So we've had to have that conversation before. We try to be gentle about it. Yeah. But I just put it there. I go, look, the numbers don't lie. It's right here. This is how much you spent this year on these items. So just keep it in mind,
That's good. And then my, last question with that too, it's like, so for busy business owners, we're happy because, there have been instances of, things happening and they don't know it. So are there any things that you would tell a business owner to kind of like keep their eye out on when someone else is doing their bookkeeping and in their books all the time? Because, we both know instances where, a contractor or bookkeeper or someone embezzled funds or what have you. So like, how can they kind of keep a sharp eye on those things with maybe some sort of high level kind of like system to just check? So what is your...
Sure. Well, I do think one, if you're a business owner that has a bookkeeper, but you don't have a CFO yet, then you need to be reviewing the books regularly, at least on a monthly basis with that bookkeeper. And you need to make sure that you understand why they have the numbers, that they're presenting the numbers to you. And you can look at detailed transactions, right? I think that also looking at your EMR system too. So again, if you're claiming $150,000 in sales for 1 month, in aesthetic record or patient hour, whatever it is, that you want to make sure that that's matching in QuickBooks. If it doesn't match, you want to know why. Counting for discounts, refunds, counting for merchant fees, all of that. And you want to make sure that your bookkeeper can clearly explain that. And then I highly recommend when you look at your profit and loss, that's a great report to look at, but look at your balance sheet and look at your statement of cash flow. I notice that most business owners, they look at their profit and loss and they just look at their net income line item. They're like, oh, great, we netted 50,000, we're good. And I'm like, that's not cash flow, right? That's not accounting for your loans. That's not accounting for any mortgages if you've got a building. That's not accounting for any owner's draw. withdrawals, right? If you're taking money out of your business personally. So look at the balance sheet and again, have that review with your bookkeeper, and they need to go through each item with you and clearly explain, this is what this is, this is what this is. Some red flags, you shouldn't have a negative bank account balance. So that's a common one, actually. People are not reconciling it. And so they'll have like negative $200,000 in their checking account. And I'm like, that's not possible. You shouldn't have negative $200,000 in your checking account. There's something wrong.
Yeah.
Undeposited funds, if that's a really high dollar amount, like $500,000, I'm like, that's probably not possible. There's no way you have $500,000 in transit. That money was either deposited or it wasn't.
Yes.
If it wasn't deposited, then you need to understand why. So those are some kind of like big red flags to look for.
And that's really until so what you bring is what I'm hearing is that you kind of really help business owners understand the story of their numbers, because there's a story that all numbers tell, right?
Yeah.
And it's
absolutely. And I find too, people get intimidated when they want to talk about numbers. It's kind of this, I don't know, people just feel shy when they talk about it. They just feel kind of exposed. And I don't know if they feel like they're going to be judged or something like that, because money sometimes can be kind of that way, I think, with some business owners. And I always want to tell my clients, I was like, listen, it's like going to the doctor's office. It's like, you got to just take your clothes off and just let me analyze you, right?
Yeah.
And so I want to do the same thing for your numbers. And I go, there's nothing that you can ask me that you should ever feel embarrassed about, or ask the bookkeeper or accountant. I was like, ask the question. It doesn't matter if you feel like it's a dumb question or a basic question. It's an important question. You absolutely need to understand your financial statements. And if you don't, I want to know that, because I want to make sure when I send you financial statements to review, you understand what the value it is that we're bringing to you here, and that you can actually make financial decisions. So I say, just ask the question. It doesn't matter how stupid it is. It doesn't matter how often you have to ask it. Like, hey, remind me, what does this mean again? Just do it. It's important. It's nothing to be embarrassed about. And that's why we're here. We're here to help you analyze your finances, so that way you can grow your business to where you want it to be. So.
And even with going back to the money conversation, there's so much. I think a lot of people have a lot of ego, and like you say, and it's just like, so they're very scared to talk about those things. However, it's just like, if you're not willing to open yourself up to your professionals, then then that's also going to show up in your business, right? Because you're not thinking about money in a positive way. You're thinking about it on a scarcity mindset instead of an abundant mindset. Because it's like, it's okay, guys, if you're making only, I don't know, $50,000 a month to start, or $20,000, you're going to start somewhere. However, it's like, let someone in, because it's like letting someone in and saying, okay, this is where I'm at right now. It's just like, you offload that off of yourself and you open yourself to more abundance to be able to bring things in, because you're not scared about right now, because that's not your future. And so I think it's another thing people have to think about too, because some newer business owners do get very apprehensive about opening their books because they're embarrassed.
Totally. Absolutely. It definitely is a mind shift. And I will say that the businesses, because we've worked with a lot of businesses, and I feel like the ones that are open and honest and willing to learn about their numbers and their financial statements, those are the ones that I see go off and grow their business exponentially. Those are the ones that are really successful, and versus I understand you're busy as a business owner, and we're trying to take some of the work off of your plate here, but you do need to take time to understand your financials. And I feel like the ones who don't take the time to learn their financials are the ones that kind of end up stuck. They kind of are constantly putting out fires. They're constantly just, running around, just like, putting out fires here, putting out fires there. And I'm like, we got to take time to really understand your finances, because I guarantee you, when you take the time to understand, you're going to make more sound decisions. And like you said, you're going to have that shift in mindset. You're going to have the abundant mindset. You're not making decisions off of fear. And you're going like, I have growth in my mind. I know where we're going to be at. I can actually plan accordingly. This is where we're at now. I'm going to be here in these months. And it's a reasonable goal, right? It's not something like insane where you're like, I'm just going to make $5 million my first year. You're going like, I'm making reasonable goals that are accessible, and I'm making sound decisions that are going to reach them. And I can do that because I understand where I'm at today and where I'm going. And your finances are the backbone of that. So
yeah, they really are, guys. So, on that note, it's like, I just want to ask you, do you have What are your top 3 things that you want to leave with our listeners today when it comes to, bookkeeping, money? And I think what we just talked about is actually something we could even end on, just because it's like mindset is one of the biggest things when you're starting your business. Even if you guys that are listening, if you're between year 1 and 3, or maybe you're thinking of leaving your practice, or have you, it's like you have to be okay that money comes and money goes. However, no, it's a tool. It's a tool.
Absolutely. Absolutely. And I think, some of the biggest takeaways, well, one, don't skimp on your bookkeeper account. I think that is a very important, again, it's everybody is getting their data from your bookkeeper. So not just your CFO, not just you, your CPA as well. So I constantly emphasize to people, don't skimp on the bookkeeper, because that's great that you got a good CPA, but your CPA is getting numbers from the bookkeeper. So tax strategy wise, right? Like you want to save on that tax bill, make sure that they have accurate numbers. You've hired a CFO because you're investing in your business because you want growth. That's great. But again, where are they getting their data? The bookkeeper, right? So what are you basing your financial decisions off of? So bookkeeper, again, I think that is the first person you should hire when it comes to your financial team. And then that way you know where you're standing and where you're going. And then again, everybody's getting their data from them. Yeah. So don't skimp on them. I think, again, having industry specific is incredibly important. And then asking about their internal systems. It's, what system do they have in place? Can they handle the work that you're about to give them? So
that's excellent. Well, thank you so much, Angelica, for being on the show today.
If you've been avoiding your books, delegating blindly, or hoping it'll all work itself out, let this be your wake-up call. Financial clarity isn't a back office task. It's the CEO's responsibility. What Angelica just laid out isn't bookkeeping. It's power. So the question is, are you building a business that's fundable, sellable, and scalable, or just something that looks good on Instagram? This podcast is here to shift how you think so you can lead differently. If this resonated, share it with another founder who needs to hear it. And if you're ready to treat your numbers like strategy, not shame, start now. Your future self will thank you. Want more clarity like this? Join the Branded Practice newsletter community. I write about strategy, systems, and brand leadership straight to your inbox. Go to diamondhandsmedia.com to sign up. And if this episode hit, share it with someone still building without a brand. This is the Diamond Hands Podcast. Thanks for listening. Now go lead.